All right, then let's focus on some earnings details. And Nasdaq-listed Cognizant, which outshone its Indian rivals in the past few years, is perhaps for the first time feeling the pangs of slowing demand in an increasingly challenging environment. The company has cut its 2012 revenue guidance to 20%, but could still match up to Infosys in the June quarter. Let's go across to the company's management, which joins us from Chennai to take us through the challenges that the company has factored in. We've got Mr. R. Chandrasekaran, the Cognizant's Group Chief Executive for Technology and Operations, joining us on the show. Mr. Chandrasekaran, firstly, thanks very much for taking time out to talk to us. Your decision to cut guidance is really the talking point today. Why the decision to cut guidance when you did meet your first quarter estimate? Tell us what the pockets of weakness that led to this really are.
Yeah, thanks, Jaren, for having me on air. First of all, we are quite pleased with our growth, both the growth that we saw in Q1, which is actually a 2.9% industry-leading growth that we registered, and also the growth outlook, though we have reduced it from 23% to 20% for the full year, it's still, by far the industry-leading growth. So we are quite pleased with the past growth as well as the growth outlook for rest of the year. But what has led to the, reducing the overall guidance is the acceleration of demand that we anticipated at the beginning of the year didn't really live up to our expectation. It is much lower than what we had anticipated originally. That's what has led to reducing the guidance. But still, we are quite pleased with the growth outlook for the company. If you really look at all the industry segments, they are all poised for good growth. Even the troubled financial services segment, though it may grow slightly lower than the company average, but it's still growing at a healthy pace for us. And, healthcare, though dragged by the pharma segment, the payer segment is tracking extremely well. So overall, healthcare is also poised for good growth. Good growth opportunities exist in the retail and manufacturing segment, as well as in the other technology, communications, information media segment. So overall, we feel pretty good about the growth outlook for the company rest of the year. And we also see pretty healthy uptake in all the service lines, whether it is infrastructure services, BPO services, or consulting. And we are also beginning to see traction in some of the emerging, Horizon 3 services. So overall, we feel pretty good about the growth outlook for the company. And, 20% is still, by any standards, is a fantastic growth.
Sure, but, is slower growth and fogginess in demand the new normal for you and indeed, for the entire IT sector overall?
I wouldn't characterize it that way. We just had, the acceleration was slower than what we had expected. Let me elaborate. In the banking segment, for example, overall our financial services segment grew healthily, right? But the banking sector was actually pretty flat in Q1, right? And some of the top banking customers, though they are gradually growing, but the discretionary spend that we were anticipating from those large clients are actually tapering down a little bit. But on the other hand, some of the medium-sized banks are increasing their, spend on, Cognizant. So that actually is growing at a very healthy pace. So overall, sort of a tempered demand as far as the banking segment is concerned. But on the other hand, the other part of the financial services, insurance, is tracking extremely well. Insurance grew by almost 6% sequentially last quarter. And we expect a good growth for insurance segment. So overall, banking and financial services will continue to grow, maybe slightly lower than the company, but still a lot of growth is out there. And similarly on the healthcare segment, let me give you some more color on the growth outlook for healthcare. While on the payer side, we saw a fantastic growth in Q1, almost 7% sequential growth. So we expect the payer segment to continue to maintain the growth momentum, a very healthy growth rest of the year, but tempered by some slowdown that we saw in the pharma segment. As you know, pharmaceutical industry is going through a lot of challenges as many of the drugs are coming off patent. And, our business in the pharma segment particularly is all about discretionary spend. So as these customers are challenged, so the discretionary spend is actually coming down. So that leads to some softness in the pharma industry. So barring these two, we see pretty healthy outlook for our business overall. So by any standards, we are quite pleased with the growth outlook, though we have reduced the outlook from 23 to 20%, but it's still a very healthy growth for the company. And it will still be, by far significantly higher than the industry growth that NASSCOM has projected, which was about 11 to 14% for the year.
Right. Right. So, but Mr. Chandrasekaran, would you say that the US presidential elections that will take place towards the end of this year are one big factor for all the softness that you are seeing in the North American market, that, where people are holding back on certain decisions that they ought to be taking?
I don't believe so. I don't think U.S. elections has got anything to do with the demand. Customers are still looking for improving the efficiency and effectiveness in their business, and they are really looking at partnering with companies like Cognizant to really be more effective in servicing their customers and also leverage our skills and capabilities to introduce newer solutions in the marketplace so that they can be more in tune with what their customers are expecting. So we don't believe that the U.S. election is a factor in the demand for our services.
Right. And lastly, Mr. Chandrasekaran, you will be almost, will almost be neck and neck with Infosys in the June quarter. How does it feel to disrupt the IT pecking order in less than a year after you beat Wipro last year?
Yeah, George, this question was asked last year also, but as we responded at that point in time, this is not something that we chase as a goal. Our goal as a company is really to be the industry leader in terms of the growth for our business. We want to really invest more through our differentiated financial model, differentiated operating model, so that we can gain market share. And as long as we continue to sort of meet those goals that we have set for ourselves, we are quite happy. And we are quite happy that even this year we are expected to post an industry-leading growth.
All right, Mr. Chandrasekaran, thanks very much.
It doesn't really matter what pecking order you are in terms of revenue.
All right. All right, thanks so much, Mr. Chandrasekaran, for joining us on the show and walking us through your quarterly performance, and congratulations on those set of numbers. We'll take a very quick break then on that note, but up ahead on the show, world markets have cracked as Europe has voted against austerity. A check on the markets when we're back.